Good evening, everybody. It's Ryan Speltz, your kick butt mortgage guy. And today and this evening, and very quickly, we're going to run through the top 3 FHA loan myths that I'm sure you've read somewhere. Lots of them out there, lots of misinformation. I hate it. I don't want it. So I'm going to dispel some of it for you. So we're going to run through them, like I said, rather quickly. I don't want to take up a lot of your time. I know it is 8:30 at night, actually where I'm at, which is Puerto Rico. But in Florida, I know it's 7:30 at night, and I will be back there in early April. We're able to help you from a lot of different places. Hi, Alicia. Thank you for jumping on, and I see your comment there. And if you're able to click the link in the description, it'll actually allow you to post and it'll show your name. Right now, as you can see, it just shows Facebook user, but it's okay. If you don't want to be identified on the stream, that's okay too. We'll be able to answer your questions either way. So ask away. This is a group for you. I created this group to basically do what I'm doing here, and that's educate, inform, help you understand that there's a lot of people out there that don't know what the hell they're talking about. And the Kick Butt Mortgage Guy process and the Kick Butt Mortgage Guy idea was born from the fact that we want to actually help home buyers get into homes and actually understand what they're buying and what they're signing, instead of just being given 100 documents and saying, here you go, this is your interest rate, this is your purchase, get out there, and this is what you have to do. So we're able to kind of break it down, help educate you throughout the process. And I've helped probably at this point close to 100 people, 100 members of the Florida First Time Homebuyers or Florida Home Buyers group now. I did update the name because I want to be more inclusive for everyone, because it's not just about being a first-time homebuyer. You're still going to have questions on the second time. And the third time and the fourth time. It never really, some of those questions go away, but there's always new ones. So let's dive in and start talking about FHA. I'm not going to put a presentation up because slides are boring, so we're just going to run through it. Myth number 1, FHA loans are only for first-time home buyers. That is just simply not true. Anyone can utilize an FHA home loan. It is a awesome aspect, ability, process. It's a popular option for home buyers, and while initially it may have been designed for first-time home buyers, it's not just only for first-time home buyers. So while I said it's a popular choice, it's a popular choice because it allows you to get into a home with a possibility of a minimum down payment, very, very low down payment of 3.5% of the purchase price. It's awesome. And now they've even recently, within the last year or so, year and a half, I think it was actually for 2023. So we're pushing a year and a half now. They've lowered the monthly mortgage insurance requirement, which makes it even more affordable. It went from 0.8% to 0.5%, which without numbers, that doesn't mean anything except they almost cut it in half. And it's actually 0.55 or 0.5 if you put 5% down. Misspoke there. Want to always be accurate with the info. But it is a great program. And again, it's not only for first-time home buyers. The one thing that it has to be, actually there's a couple things, but the one main thing is it has to be for a primary residence. You have to be wanting to live in that home. Just approach this conversation with a couple other people, with someone actually in this group and a couple other people about wanting to buy an FHA loan or buy a home with an FHA loan for an investment purpose. Can't do it. You can buy the FHA or buy the home with the FHA loan, live in it for a year, and then move out and utilize it as an investment property. More than okay to do that. If you've been able to save up for a down payment on a new home, or you're just relocating or whatever it takes, you can utilize that house then as you move out as an investment property. That is not a problem. But the intention of when you move in has to be that you're going to intend to live there for the first 12 months, and you would have to move in then within 90 days. The other aspect of that is you can't have more than one FHA loan except in certain circumstances. So if you're trying to buy a second home on another primary residence in the same city, it's going to be difficult. It's because you can't just utilize the program to go buy a bunch of primary residences unless you refinance it into a conventional loan, the first one into a conventional loan, or you're moving over 100 miles away, or you have a legitimate reason of, hey, we're having triplets and our house is too small now, we need to buy a bigger home, then sometimes they'll allow you to keep the old home and utilize another FHA loan at the same time. So got to be a primary residence. Tough to buy two primary residences with FHA loans and keep the FHA loans, but we have some strategies around that as well. The myth number 2, FHA loans are only for low income borrowers, and that is just not true. There is no income limit when it comes to FHA loans. Generally, the income limits come into play on other first-time home buyer loans, conventional being one of them. They have a 3% down conventional loan for the higher credit score borrowers, but you have to be under a certain, in most cases, you have to be under a certain income level to be able to utilize that program. FHA doesn't require that. FHA allows you to buy with any amount of income. In fact, when one of the first years in the business for me, about 8 years ago, I helped somebody that was making $244,000 utilize an FHA loan to purchase their primary residence. He was able to get in with 3.5% down. And at that time, it was because the reason we were going that route was because he had a lower credit score. Now we've closed on 2 home loans since with him. One of them was a refinance into a conventional, and then the next one he purchased another one, and his credit score is like 780. And he's still making a bunch of money. Granted, he went to doctor school, so he's got a bunch of student loans too. So win some, lose some, I guess. But my point being, there is no income limit on an FHA loan. You can utilize it no matter how high your income is. And a lot of times, if your income is lower, it can be a better program for you, but it's not just designed for a low-income borrower. Myth number 3, FHA loans require perfect credit. Now, I kind of hinted on this one in that last one when I was rambling there about the client that I helped about 8 years ago. One of the benefits of an FHA loan is that it's pretty lenient on credit. If you have established credit and you've got scores, oftentimes we can get you approved for an FHA loan. I'm going to caveat the heck out of this one because a lot of people are going to come at me and say, I've been turned down by the FHA. Well, I'm going to promise you that if your loan officer told you that you got turned down by the FHA, it's because they were speaking out of pocket, and the FHA doesn't turn people down. He turned you down or she turned you down. That person is uneducated and says the FHA turned you down. Not the case. Are there guidelines the FHA puts out for lenders to abide by? Absolutely. But the FHA is never going to get on the phone and call you as a borrower and say, you don't qualify. That lender either didn't know the guidelines, or maybe you just don't have a qualifiable situation and he was blaming FHA. But either way, irresponsible of that statement coming out of someone's mouth. Never, ever, ever should you be told that the VA, FHA, the conventional, Fannie Mae turned you down. Fannie's not calling you. I can promise you. I don't even know Fannie's number. She doesn't call very often. So the company or the organization that insures the loan is never going to turn you down. That loan officer turned you down themselves. And they tried to blame it on FHA because they don't know how to speak clearly. I will tell you, I'm never going to turn you down. I will say not yet. I will often say not yet. And that's because there's things to work on. But what we're going to do together is when you apply, we're going to build a plan to get you into a home as soon as you need to. So we're going to take a look at your credit. We're going to take a look at your situation. And if it doesn't qualify, we're going to give you some solutions to make it happen. We're going to make sure that you don't come out of that meeting feeling like crap because somebody said no. And I will also add this one. Many people that have gone to see that loan officer that says FHA turned them down have come to me and come to my team, and we've been able to get them approved. I'm not saying it's going to happen for you. I'm just saying it's happened. And the reason it's happened is because being in the industry for almost a decade, I understand that mortgage guidelines change all the time. I'm not sitting here saying I know it all. I'm not going to look at your file and make a decision because I think I know something that may have changed 6 months ago and I missed it. It's something that comes into play very, very often. So if you get told no by anybody, please, 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 please come to me. Tag somebody in the comments that you know has been told no. I want to talk to them because we can together build a plan. If it truly is no, you and I can build a plan to get to that point and be able to buy that house, because it is possible for a large majority of the population that doesn't even know it. So back to the FHA credit score. I do see your comment there. Give me 2 seconds and I will answer that. One of the benefits, like I said, it is lenient. So technically, to the guideline, the FHA guidelines allow you to go down to a credit score as low as 500. I'm sure many of you heard 580. But the true answer is 500. Now, obviously, there's some caveats here. If you have a little bit more money. So anything below 580, minimum down payment goes to 10%. You also can't have any derogatory credit in 24 months. It's tough. I will say within the last 6 months, we have closed, I'm sorry, not 6. Let's go 10 months. Within the last 10 months, last April or last May, we closed a loan for somebody, and I believe they're in this group, with a 555 credit score, and they were able to buy the house. Everything worked out perfectly. They were able to get a gift for their down payment, and it ended up being 15% or 20% down. It was a great situation, the perfect storm of 555 credit, no derogatory credit in the last 2 years. Everything worked out perfectly. So under 580, everything kind of has to come together. So I will bring up your question now because I believe I just answered it. But if someone has a low credit score but has taken care of bad debts and has a large down payment, is there a chance to get a loan? The answer is yes. Touch base with me. Let's chat and see what the plan can be to get you a home, because it's possible, especially with that big percentage. It pays to have money in this case, right? If you don't have credit, but you've got money, we can do it. I can't say we can do it. We'll look at doing it, and we'll make sure that, you know, your no is actually a no. I won't tell you yes, but I'm not going to tell you no either. Okay. So yes, reach out. We'll touch base on that. So going on that perfect credit piece, for borrowers with 580 or above, that down payment is as low as 3.5%. It's super accessible for the majority of people. If you've been told no because of debt to income ratio, FHA has a higher available debt to income ratio than a conventional loan. Conventional is not always better. I promise you. I promise you. I've seen comparable situations where FHA has $200 a month in mortgage insurance and conventional has $400 a month in mortgage insurance, and the payments nearly double. FHA has better interest rates than conventional loans. FHA has generally, for the most part, depending on where your credit score is, for the typical FHA buyer, there's better interest rates, there's better loan or mortgage insurance. It's just a better scenario all around. So I know you're hearing consistent marketing that goes towards low interest rate, low fees, low interest rate, low fees. That's what the entire market wants to sell you. That's what every loan officer wants to sell you. And if you're going with some of these bigger companies, they're going to actually utilize that marketing technique and just push you across the table with a quote unquote low interest rate. And they're sneaking in 3 to 4% in discount points, and they don't tell you about it. So you never understand what you're signing. We don't do that. We make sure that you understand what the differences are, and you're going to choose your rate and fees. We're not just going to tell you what you're going to take. That's the only way this has to happen, is you need to understand what you're actually buying. And that is one of the most important pieces of the entire process. And that is my passion, is allowing that to happen and helping you fully understand what's going through what you're buying and what you're signing. So I appreciate you all watching today. Obviously, FHA loans are a fantastic tool, but I'm trying to cut through the myths and help you understand the realities behind the myths, because it can help you. It can help you make informed decisions, and maybe FHA is the right loan. Maybe it's not, but that's not my choice to make. I'm supposed to give you options and show you this one's probably the better one, and I will definitely give you my professional opinion. Reach out to me. Happy to talk. No obligations about anything. Thanks for watching. We'll talk to you soon.